I'm looking for price to respect this, continue higher, hit this key level, close above. That's going to be our sign of continuation. That'll be the determining factor on what price wants to do. If this breaker block here is closed above, right, and wicks past this, I'm convinced that price is going to go down. But if we get a closure and a large candle that closes up above this, price is going to continue higher, much higher. I think that's a valid thought process, because it's only when a disrespected breaker block forms that price reverses. But if a breaker block is respected and then closed so high up above that one we hit key level and sweep past, it'll be from a large candle wick, a large candlestick, and it'll create a fair value gap that will replace the breaker block completely. And from that, we'll see continuation higher. More than likely, we'll see another chain of fair value gaps like this one here, where we see 1, 2, 3 form, and then from that, it'll continue higher. But we want to catch it on the first one. We want to see it continue. And we need to see the continuation confluences line up for us on the 5-minute and the 1-minute, so we can catch the best trade possible in going in an uptrend. Right now, price is being respected. We have a new low formed. This right here is the most recent low. Until we see another confluence form before us, I am going to pause the video. BRB, I'm going to review some stuff over YouTube. And yeah, we'll come back. Hopefully we get a decent trade today. I feel confident in my ability in identifying each and every single one of these building blocks that we have here. Every single building block right up to this, I'm confident I have identified and spelt out for myself. I want to send one of my videos to TJR. I want to have him roast me alive on the internet. Just completely thrash me. Because I feel like it would do me some good. The reverse psychology mental, right? Because I feel like I have the potential to be really, really good at this. But I won't know until I take my trade, the one trade that's going to make or break me. And this is a very safe strategy. De-risk until, 1, I see a clear trade, or 2, I don't trade. Fair strategy. I'm going to pause the video now. So, a couple things. This is the NASDAQ. 1, I wanted to point out, we broke structure on the NASDAQ. So, technically, we're in a downtrend now for the NASDAQ. Right. S&P is soon to follow. I'm actually looking at the S&P right now. We still have not broke structure on the S&P. We haven't. We have not. What I'm looking at is a fair value gap getting filled on the 30-minute here. So this fair value gap? Yep, it is. This fair value gap specifically is getting filled. Price came down, barely nicked it on this leg back up. This price came back down, filled it completely, though it didn't close it. So it's not an inverse fair value gap. It is a solid fair value gap, right? We have not had a low close below. What we're looking for is for price to come and sweep these lows here, which means it'll close below a bunch of these, respect this high time frame fair value gap, and after it's swept those lows, it will continue higher. That's what we wanted to do. If we were to stop, if I were to stop right now and think for a second, what building blocks have presented themselves? Well, we identified the breaker block, failed retrace, and then we identified an order block that caused the sweep. Sweep of the low is valid. Down, up, low, boom, yes. On the hour, this low swept this low, which is what we needed to happen. That's a liquidity sweep. Cool. Well, now price is continuing lower. Price has gone lower, but it has not closed below the previous lows. So, what exactly are we waiting on? We're waiting on price to not only close and respect this fair value gap, but we also want it to continue higher. We want it to close above a high. So we know that price is going higher. We want it to continue higher. I think before that can happen, though, we're going to see price continue lower. It's going to sweep And so we have low here and low here on the high time frame, right? But it's low resistance. We want on the low time frame right here, we want this low, and this low, this general trend. We want all of these to get swept, past. I want to see price move down, sweep this, close within this fair value gap, and then move higher. That's what I want to see happen. I can't count that one. I don't think I can. These are closer to each other, so this one, and this one. Low time frame, low resistance. These are relatively close. Let's look at it from the flip side, shall we? Because we have relative equal highs here and here. This is a super strong draw on liquidity. This is a prime setup. So what I think is going to happen is price is going to continue lower. There's about to be a large wick, large candlestick down. It's going to sweep all of these lows. And what's going to happen is it's going to sweep, close, potentially wick past this. It'll probably wick past this right here. Once it wicks past this and closes within this, it's going to sweep these lows and then continue higher in the opposite direction. News. That's what's going to happen. News is going to happen. News has happened. It's 8:38. We have 2 orange folders done and out the way. If greater than forecast, good for currency, price moves down. If greater than forecast, good for currency, price moves down. Greater. Cool. We have 2 more folders to get through. At 10 a.m., we have if greater than forecast, good for currency. So if green, move down. Same. Oh, no. It's different. More hawkish than expected is good for currency. We're looking for a change in volume. So I think it's best if we wait. Market is open, but we want to see it with our own 2 eyes. How's your Tuesday, guys? It's relatively early in the morning. I could go for some cereal. We ain't got cereal, though, fortunately. My Tuesday's going pretty well. I wish I had gotten a little more sleep. I wish I could stop feeling like I'm I'm sorry there's a lot of silence in a lot of these videos of mine. That second one right there that's currently forming, that's our break of structure. We want it to close below that low. Once it has, it will not only invert that fair value gap, like a deer in headlights right now, because I'm looking at this, right? We have a break of structure and an inverse fair value gap at the same time, which is cool. That works. But now I don't know what my next step is. A break of structure says the general trend is reversed. We're no longer in an uptrend, we're in a downtrend. An inverse fair value gap says we're no longer continuing up, we're going down. On a lower time frame, you could tell, I could tell, we could tell, down. The fair value gap right here says down. So the question then becomes, what are we looking for price to go higher? Well, we're looking for this fair value gap right here to get respected. Wick below this, but close within. So long as it closes within and then continues higher, that's what we're after. However, we need a reversal sign. That reversal sign would have been the sweepage of all these lows here. You know what I think it's doing? I think it's actually going to go for the high time frame draw. It's going to go for the high time frame draw. Right now, there are 2 setups in reverse order, right? Both of which are high time frame draws. We have low resistance here and low resistance here, both of which are pointing down. I think it's going to go down. I think this is a key level that's bound to get hit. I think this key level here is what we ought to be paying attention to. If price wants to go higher, we'll see a break of structure out of it, which means we'll need price to come all the way up here and close above this. Price either closes above that and continues higher, or it closes below this and continues lower. We'll see here in a little bit. I'm going to pause until one of the 2 get hit. I'll be right back. Okay, I think we have a valid key level hit. I think we do. So we listed this one, and this one as the level of liquidity. It all got swept past. It claimed all 3 of them. So, and we broke structure back to into the downtrend. We're in a downtrend now, right? So right now, what I'm looking for is price to come down wick past this, but close above, and then as a result, continue higher. No, 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 no. Let's stick with the downtrend for now. Yeah, let's stick with the downtrend. We have a large candle moving down. It is currently 9 a.m. We can't really look at this anymore because, one, what's the key level that was hit? The key level was a respected fair value gap. It wicked down here. It closed the fair value gap. It filled the fair value gap, but it did not disrespect it. We're having a green candle form now on the 9 o'clock mark. So right there. It's currently doing its thing. Going up. Which is cool. Yep, price traveled all the way down and did that. What are we looking for on the 5-minute? We're looking for a break of structure or an inverse for value gap. We're going to get a break of structure before we get an inverse for value gap. I think we can see this because it is in time. This right here, 5-minute fair value gap form here. We're looking for this right here to get closed above. This would also give us a break of structure off of this high here. It's currently what we're waiting on. Right now, it's doing just that. This right here is the wick that comes down over into this, right? It'll actually stop just above it. Green candle will pop up. It'll go down a little bit lower, wick into that, but not close below. It'll close up here, almost in line with this, just a little bit lower, and then we'll have this candle form as well, and it's currently about to close above this. We need a closure. Looks like we're about to have that inverse value gap as well. This right here is about to get inverted. We have 20 seconds. Let's see what's going to happen. Come on, give it. Give it to me. Come on. Give it to me. We're looking to take a long off a respected fair value gap. Break of structure back to the upside. That broke structure. The high was closed above. I want to see that inverse fair value gap. If we were to continue from that on to the 5-minute, we're looking for, after the break of structure, the reaction. Either a fair value gap, breaker block, order block, or for price to come back within equilibrium. For price to go back within equilibrium, we would need it to come down first. It'll come down back into this and should continue higher. NASDAQ says higher for this, while the S&P says lower. The S&P is the lagging index, so it's going to go higher. Looking at S&P, we just got the inverted fair value gap. We actually created a fair value gap as well. I've done that before. I've said break of structure, and then immediately after on the same candle we get a fair value gap. I think that is incorrect. We're pretty much filling the fair value gap at the moment. Currently, price is like right on that, right on this line. I know this is going to be a long video. I'm sorry. It's currently 9 a.m. We've been recording for almost an hour. I want to say over half of this video has been silence. That's just me waiting, looking, and seeing. We have 1 minute for this candle to close. If it closes above that, it's an inverse value gap, in which case we're going to see price continue higher, which is what we want to see. We want to see that happen. Most recent high to most recent low. This high to this low here. Boom. Price is currently up into that. Most recent high would be, it'd be the inverse. Low to high currently is right in this here. That closed above. That's an inverse for value gap. We need one more candle closure to make that inverse. My goal is to take a long on this, on this trade. Or at least to try to. If in the next 3 minutes this closes up in the up position, not only will we have a break for structure and inverse fair value gap, but we'll also have been presented a fair value gap, which I am more than willing to say okay to, and then move on down to the 1 minute for our break of structure or inverse fair value gap. Why did I put this here? I don't know why I put this here. Am I confident in everything I've identified so far? Am I? Am I? Really? Am I confident? On the hour, let's just back up to reevaluate. Okay? Just so we're on the same page. We have big high time frame fair value gap here, right? We have, let's actually go all the way back up, shall we? All the way. Because why not? We have a fair value gap here. High time frame. This is the daily. Bearish time frame. Bearish fair value gap here, right? From this, we're looking for it to continue higher. We're wanting, because, again, we have not broke structure out of this uptrend. We're looking for it to continue higher. This says up. The trend is up. 1 hour time frame. Boom. What am I seeing? I'm seeing uptrend, just like in the daily. We were in a downtrend. We broke structure out of it off of this one here. Broke structure off this high. We inverted a fair value gap. Price pushed higher. We swept all of these low resistance highs here. All the low resistance liquidity. From here, we created a new high. We've been in retrace ever since. We broke structure to the downside, thinking it was going to continue on lower, right? This was our breaker block, though. That doesn't make any sense. Breaker block, order block, sweep of lows. That's what this was. From this sweep, we should have moved on, and it had been more easily depicted here. We had a group of lows that got swept out. It swept. Cool. From here, we're looking for the reaction off the sweep, which is per this move down. Sweep is the sign of reversal to move back up out of this downtrend, which is what we're after. On the 5 minute, we got just that. Boom. On this candle specifically, we broke structure out of, and we have a fourth candle here that's actually helping us out. In the next 30 seconds, if it closes, we will have an inverse fair value gap saying, yes, price is going to go higher. That's on the 5 minute time frame. We're looking for, at that point, for the 5 minute breaker block to get filled, order block to get filled, a fair value gap to form, or for price to come back down into equilibrium. How does that present itself? Well, for a fair value gap to form, it's just candle, 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 gap. And that gap isn't going to inverse anything over here. It's just going to present a gap. And from that, it'll continue higher. Breaker blocks form on the move just before an order block. How do you identify a breaker block? It's the failed retrace. So in an uptrend, it'd be the after a move down, right? Or, I'm sorry, because this is a downtrend at the moment. Sorry, because we broke structure, it's in a downtrend, we swept. The breaker block in this case would be a down candle that fails to close below the most recent low. That's our breaker block. Respected breaker block, it continues higher. There's no wick below it saying, yes, the price is going lower. No, it's going higher. Order blocks form. That's when, after a breaker block is identified, we have an order block. Order block is the move in the opposite direction of a breaker block, right? And it sweeps. It is what causes the sweep in liquidity. It says price is going to go in the opposite direction. And then equilibrium is when price decides it's going to come back down between the most recent high and the most recent low. And it'll hit the, is it the 38.2 extension? This. 0.382. It'll hit either this extension or this extension. That'll be within equilibrium. And that is best determined between the low, most recent low here, and the most recent high relative to up there. It's right in that, isn't it? Yeah, it is. That's the most recent high at the moment. For it to come back down, it would need to hit this right here in equilibrium, then continue higher. So right now, we have breaker structure and inverse fair value gap on the 5 minute. Now we're waiting on the retrace. That retrace is going to give us a breaker block, or it'll just come back down into equilibrium on the 5 minute. It's about to be 9:50. The next set of news is at 10. CB consumer confidence. If the actual is greater than forecast, it's good for currency. Previous was 86. Forecast is 87.1. It was greater than the last one. So price should come back down at around 10. At 10:10 p.m., there's an FOMC folder. We don't know what that's going to do. That's the unpredictable one. So what I'm going to do is I'm going to wait patiently. I think that's the best course of action right now and the safest course of action. De-risk and wait patiently. We have two more candles formed already. We have a small one here and a smaller one up there. Sorry, smaller one here, bigger one here. It's currently wicked up past like roughly in here at the moment. Roughly that range. The spread's pretty decent. I'm looking at the spread now. I think we're going to get a fair value gap out of this current move up. I think we're going to get a fair value gap. Stuff. I'm going to wait. It's 9:20 right now. I see a leg up. Breaker structure, inverse value gap. That's cool. I want more. I want one of these. I'm going to pause the video. I'll be right back when I see the next confluence reveal itself. Okay, so got to look at, got to thinking, got to analyze it, right? General trend is down right now, but we're looking at breaker block, order block, sweep. If this is the sweep, we'll see a huge leg down here, which is what I am seeing at the moment. The sweep is good, sign of reversal. From there, off of that sweep, we're looking on the 1 minute, and it's more accurately depicted here. We had breaker block, failed retrace on an uptrend. Well, the trend is down, really. Yeah, there it goes. Just disrespected the fair value gap. Sick and tired of being bewildered, man. This is actually getting old. I'm going to delete this right quick. So, price actually came back down into equilibrium from this high here. Right, we were above it for a decent minute on the 5 minute. Right, price went above it and then crashed. 2 wicks down, 2 candles down. Price came all the way down, wicks past the 2 candles did not close below, but the third one's fighting. It doesn't know where it wants to go. We had an inverse for value gap on the 5 minute, a large one, and a break of structure back to the downside. I think we enter element. Before we do that, let's do this right quick. So this is the most recent low, most recent high on the higher time frame, right? For the session highs and lows. Price coming into equilibrium, it would have come down into this, bounced off, went higher. It did just that. Now I'm looking at price disrespecting equilibrium. Equilibrium is a sign of continuation. If it comes down into this and continues higher, yay, that works. But if it is a disrespected equilibrium, it's not continuing higher. It's going lower. So from here, it's a matter of going down to the 1 minute and identifying where the break of structure happens. It's already happened. Or an inverse value gap on the 1 minute. It's already happened. Now we're watching price continue lower. Do we want to enter on a sell position though? Short. Because our first take profit, if we were to do that, is all the way, that's our first take, that's our key level. This is our first take profit, second and third, right? Currently price is like right in this. The move is hot. I say we press sell. We put our stop loss in a relative safe spot at the top of this here. Boom. Modify. Put our take profit down here. Modify. We'll do similar stuff here. Edit. Boom. Stop loss. We'll drag up there. Keep it out the way. And our take profit. We'll drag down here. Boom. Confirm. We'll leave that alone for a little while. If we see take profit 1 about to get hit, I'm actually very tempted to go to the 30 minute right quick. Yeah, because that's the 30 minute right there.